Good day, all. Ira Epstein with your SPDR ETF wrap-up, and this wrap-up is for Sunday, the 13th of February, 2022, about 3:45 in the afternoon. I intentionally waited as long as I could to see if there was any more news to report on the Ukraine. We see that there's been leaks, that intelligence reports have it that Wednesday will be the day of the invasion. Most people thought it would be after the Olympics, but that's what the newest intelligence is. The Biden administration has told Americans, as have 12 other countries, to get out of the embassies, get home, get out of the country right now. The Biden administration made it very clear they will not be sending in soldiers for Americans who have decided they're going to stay there and they find themselves in harm's way. There'll be no help. The roads are open. This is what was on the press today. The roads are open. The trains are running and airplanes are running. I just read an article where the insurers demanded more premium to keep the planes running to the Ukraine, upwards of $600 million. So, the situation's quite serious, and you got to play it as it is. It's obviously up to President Putin. He's already financially hurting the Ukraine. But if he wants the land grab, he's got his shot at it right now. You got this all amassed. Why not go for it? Nobody's going to stop you. That's the thing. Europe is weak. They count the oil. They count the natural gas. They count the money that is owed to them for monies they've lent Russia. They've even told President Biden, you cannot shut down the SWIFT system, the international banking system, to Russia, because they wouldn't get paid the debt that is owed them. So what do you have? Unfortunately, folks, the way it reads to me, it's all up to what the President Putin wants to do. There'll be deaths on both sides, but once he gets it, he hasn't given back Crimea. He won't give back the land grab out of here either, and he'll be pushing further in, and there'll be more demands. So as you can imagine, Taiwan has to be watching this. We know that China's watching it, and they think we're weak. What other way can you go with it? So as we look at the markets, you saw on Friday afternoon the Swan events. Somehow I believe that leakage happened that Wednesday was going to be a date, and we saw stocks plummet. Bonds and notes rallied rather dramatically. Gold up, the dollar up. Japanese yen, Swiss franc, the typical safe haven currencies. Oil took off to the upside, and grains took off. All the things involved in the war. Grains especially because of all the wheat that Russia and the Ukraine send. I mean, these are major wheat export countries. What happens there? And in oil, you don't know what will happen. Is anything going to be shut off? Who knows? I kept Facebook up instead of going to IBM because this chart's just the chart you want to see rather than IBM's. You're still in a big downtrend. The market is under the 200-day average, but this is often how you get to this number and you start fighting. It's 2 weeks in a row that we've been hitting that average. Yes, you closed under it with the market as a whole, and you're under 2 weeks in the Bollinger Bands too. So is there any support under the market? Frankly, there isn't. It'll find its natural event when people say, hey, what are the price earnings of the chart? What's looking on here? Has the market overdone it? That's what will support the market eventually when the traders make that decision. If you're looking for a chart point, it isn't there. That's what I wanted to show you. When you go to the banks, the KBE, it tracks the bank index. Well, obviously, you've got a positive and a negative. Number one, the curve yield's done this. Number two, it can keep doing that. It can go, the other way on you. That also hurts the banks at a point because when you've got the spread of the lower to the upper ones, you've got that spread difference. I'm taking in money from here. I'm going to lend it out there, right? Well, when they curve yields like that, and you've got to pay more to get the money in here, the depositors want more right now, and you can only lend it out as such, it starts narrowing in. That doesn't make for the prettiness that many people thought higher rates would do. In the industrial sector, certainly the market is back down to the Bollinger Band, but this is where I think the market tries to find its footing. It can't get through the upper band, it's not getting through the lower band, and it's basically all sideways action. Will this turn out to be a top or a bottom base to work from? Base is the word I'm using. I don't know. If you break out the top side, which is what I would have thought when COVID ends, that's it. But all this talk about raising interest rates, central bank after central bank, if this happens, especially in the U.S., 7 rate hikes like they're talking, I would think that hurts the economy. And that's what you're seeing. You're seeing a lot of pressure because people are getting worried about that. The energy sector is running off of what? There's nothing you can do. You can't produce enough oil. If there's an invasion by Russia, if they use oil as a weapon, where are you going to make up the difference? I know where the Biden administration wants to make it up. They want to make it up out of Iran. They don't dare do the right thing of producing at home. We can turn on our spigots in 2 months. We were self-sufficient. We were a leading exporter. The Biden administration turned that all off with this idea of green. And here's the fallacy of the green. The people we're paying, they're just going to keep increasing their production areas. So while the world is saying we're going to get to greener things, and I'm agreeing with that, it takes time. And in that time, why do you take and put us at the mercy of those type of markets and inflation? How much has energy that we could have controlled contributed to the inflation going on right now? Dramatically. Dramatic. Would WTI be at $90 a barrel? Probably not. These are the things you've got to live with. There's a way to get where you're going, and there's a way not to do it. We're in the not to do it right way. But in any case, here's where you're at, and these are just moving to the upside, and you're not going to get willing sellers in because they're scared of the war event and what happens with that oil production. In SPY, all you did is rally back to the 18-day average in a classic bear fashion. You rally up, you get to the 18-week average, and you fall from there. To know that you've got something brewing to the upside, you've got to take out this past week, not this week, the past week's high of 458.12. Until that's done, it'll be easier to get to the lower Bollinger Band and keep the bearish mode in most stock indices. Obviously, emerging markets are looking at all this, and they can't do well in an environment where interest rates are going to just take off and the world's talking war. People aren't doing anything in these just yet. I see the ads on TV going, you can't get from TD Waterhouse, I think it is. You can't do these. We can help you in the foreign markets. Well, to help you do what? That's the issue that I've got. Gold, obviously, you don't have to be a genius. You get a war. Let me bring this back here. You get a war event, and gold's going to probably jump. You're at the upper Bollinger Band. I think pros took money off the table there. Your momentum's up, your trend is up, but the first time you hit an upper Bollinger Band is where I think pros take money off the table. You got to 174.20 on this week. The Bollinger Band's 174.17. So there's a reason the market stops there. I'm not the only one looking at those type of things. Then we get to the gold miners. Well, if the gold's worth money, the miners aren't going to sit down. The difference is they're not producing it yet. They've got to take it out of the ground, get it there, whereas the raw material is worth more. But they certainly showed their hand. They held the 200-week average, the lower Bollinger Band, and they've stuck themselves back up here. They're not trending, but they're no longer in the bear camp either. In ARC, what can I tell you? You get a bounce, and that's about it. This is so out of favor. It was a $160 stock a year ago. It's $71 now. At some point, it'll get to its point where people believe this is a good time for it. That hasn't shown itself yet. Amazon, under a lot of pressure. Cost pressures are just hitting them everywhere. Every time you read anything, it's the items for sale have gone up. The labor cost in getting them to you, the postage cost, everything is going up. We just saw Prime go up, what? If you're going to use Prime to get this 20% raise almost, I'm giving you round figures. But that's going to add to their revenue, and it's not going to go away. The problem is we have to deal with the cost surges that are hitting them, and they're massive. Apple. I was telling people on the dailies that I still think Apple can slip back here. And now I at least can tell you where I'm wrong. Wrong. If you take out this week's high of 176.65, I'm wrong in thinking the market might be slipping back towards the 18-week average. I have to back away from that. Tesla, you can see how it's just slipping away here. It's no longer the $1,200 level. We're sitting here now at 860. Could be headed to the 800 level, the lower Bollinger Band. I would use this week's high as an important number. And as much as you want to break under the Bollinger Band, I teach you never go short under a Bollinger Band. I wouldn't be surprised if this market lifts back up to the 200-week average and a battle starts shaping up right there. Now, we've made a lot of changes, and I don't know if you're aware of it if you've got our QT Mobile, but the stock symbols work now. So you've got your stock symbols, your spider symbols. It took us 2 years to get this all put together the way we wanted it to work. Futures we've had, but now we've increased our options on futures. All the new features are in here. You're going to see a lot of new features. Easier to read, faster, to get around with it. Just hit this for a chart. The chart screens are just phenomenal now. You know, everybody has chart screens with these, but using them, that's difficult. My videos all play through this, and in America now, and Canada, I believe, we're able to send the texts out, and you're getting them when I'm putting them out, so you get them. We're working on Europe, South America right now. It's obviously a cost thing. It's not a problem getting it there, but at a reasonable cost, so we don't have to raise prices on any of this. You're driving in your car. Just tell the system to play your quote file. Can I make it easier? I don't want you looking at the screen. Tell it to play and tell it to stop playing. It'll do it all for you. So how do you get this? It's free. Come on. Just go to our website under free offers, sign up for it. We will then send you your username, your password. Give it a try. I think you'll find it's phenomenal. I'm Ira Epstein. You have a great day. I'll see you all tomorrow.